All right, good morning, everyone. Today is January 27th, 2021, and I'm back with another Wednesday live show. And boy, there's a lot of action today in the market. The Dow's down 514 points. S&P's down 65 points, which is 1.7%, and Nasdaq's down about 1.5%, and there's all kinds of crazy stuff going on. We're right in the thick of earnings season, and I believe for the rest of this week that a bunch of the big cap, big name stocks are going to release earnings. Boeing came out with earnings, and it's down like $9 this morning. So lots of craziness going on, and of course everybody's aware of all the craziness with the short squeezes and all that kind of stuff. That's all they're talking about on CNBC lately. So, yeah, lots of excitement. So, here we are getting towards the end of January and things are starting to heat up. In the time that I just mentioned that, the Dow's bounced back a little bit. It's only down 470 now. So, there's a lot of craziness happened. So, here's a look at the SPY, and as I've been sort of monitoring geez, for a long time here, since before the beginning of the year, really, since the beginning of the year, this uptrend line, which is, rising at a pretty sharp clip, kind of feels like this market is ready for a little bit of a dip or a correction or whatever. So, but here's the thing is this particular trend line right here, I shouldn't have moved it, but I did. This particular trend line is, pretty much, you could probably, if you put it up here, let's see, where's my candlestick chart here? There we go. Let's see what this thing looks like if I use a candle chart there. Came pretty close to it this morning. The low on the SPY is 375.63, which still puts it above this trend line, just barely. But here's the thing, trend lines, the thicker you draw a trend line, the better it is. It's not really, a pixel here, a pixel there doesn't make a whole lot of difference. I tend to like to draw them across the absolute lows. So suppose I could draw it like that for right now, and then when it gets broken, move it back down. But you get the idea. I mean, the market really needs sort of a shakeout, right? Because it seems like obviously like there's a lot of crazy speculation and it's just very seems extended. Interestingly enough, if we look at let's see, here's what I was looking for. I was looking for this chart with the RSI on it. The RSI's kind of been not really, it poked over 70 a little bit here, but it's not extremely extended. And funny thing is, just past couple days here, has actually sort of sold down to the midpoint of the range there. So it's just been one of those sort of slow, steady drift ups. And there's been quite a few days, especially last week. There was some narrow range, kind of boring days, not a whole lot happening. So anyway, all of a sudden today though, there's a lot of momentum stocks, a lot of high flyers getting hit pretty hard today. And Boeing, interestingly enough, Boeing has been on our pending list for a while, and you can see that it continues to sell off, right? Originally, and I marked. We'll have to look at it again today and see what the current entry is, but it hasn't been able to close above the trigger price yet, and so you can see how it's kind of following it down. At some point, depending on what it does here, at some point it could potentially drop off the pending list. This is still kind of just a normal correction. I mean, even though it's extremely significant, based on this run up, it's just given back geez, it seems like it's, barely given back just about half of this previous run up. So everybody's talking about GameStop now. Look at this. This is just absolutely insane, right? I mean, just crazy. This stock was, let's see, last Wednesday, the stock was, 36, $40, right? And this morning it opened at 354. And so now this AMCX and AMC, which kind of doesn't make sense, but they're the ones that everyone's targeting now as far as, so the idea, and I'm sure you've heard this, ad nauseum if you watch CNBC or financial TV or read any of that stuff, but the idea is that group of Reddit users are targeting um, stocks that have like extremely high short interest. And yeah, I remember years ago, decades ago, back when I used to get a Barron's every week, you'd look at, I think it was Barron's. They would have like a list of stocks that had, extremely high short interest, and it would say like days, based on the average volume, it would tell you the days of average volume required to cover for the shorts to cover, and it seemed kind of weird, but I mean, it seems kind of weird that, and so, but hey, the internet has opened up a whole new world of craziness, obviously. So anyway, real quick, I'm gonna go through. It looks like we've got a few of the open trades. We got 6 open trades, and let's look at those real quick here. We got 6 open trades, and 3 of them have extremely significant gains, and 3 of them are just, we're just kind of floating around, not much happening. And so it looks to me like, looking over here at my Thinkorswim with the real-time quotes, it looks to me like several of these, at least a couple of the open trades here are going to tag the trailing stop. So let's start from the top down here real quick. And then there's a whole bunch more pending trades, so I wanted to look through those real quick today too. This ATUS, this one kind of triggered in weird on this big long range day, and so the trailing stop, is still the initial stop. Like, it hasn't moved. It's down below this pattern, but yeah, not looking so hot, quite honestly. It triggered in on a big sort of long range spike up day, and then it's been downhill ever since, so that's not looking so great. I mean, honestly, it did have a decent pattern here, but thing of it is that, the trades are going to ebb and flow with the overall market, and we had a lot of, to close out the year last year, we had a lot of really nice, nice swing trades because the market kind of drifted up, but the volatility in individual stocks now is astronomical. So percentage wise anyways, I mean, to see stocks move, and but check it out, AMD just came out with earnings. This was on the pending list, and it was trying to trigger in. It was on the pending list at some point, and it looked like it was going to trigger in, and then I realized that they were coming out with earnings today, and so I had to delete it. But anyway, yeah, you can see that reaction. This thing's down, 6.5% one day, and so the volatility in some of these stocks is really, really crazy. ATUS looking a little bit rough, although you never know. I mean, the market sold off pretty significantly at the open today, and so if it gets a bounce later on, we could put in like a little low here. The next one here, this XLRN, hit the stop this morning. The stop had trailed up one time, and this is another one. I mean, I sort of had high hopes for this one just because of the zigzag pattern where it tends to you know, create the cup all the way back to the highs and that. So, but anyway, yeah, it just it actually did sort of rebound all the way back up towards the previous highs, but this sell-off right here um, took out the stop basically today. So it is what it is. The mRNA seems to be, out of this latest batch here, seems to be the one that's really turned the corner. So it hit the target this morning, and this is the idea of it. So we looked at this quite a bit last week on the show, talked about the, you know, pulling back to this major support level and turning around, and so yeah, that's what we're looking for right there. So as of yesterday, this thing was up 26% from the trigger price. And so even with this little bit of a gap up here over the trigger, it looks like it will have hit the target today. So that's good. And it's interesting how this thing sold off like that, given the fact that, you know, they're one of the vaccine makers. But I think I saw a note this morning that said that obviously the United States has stepped up buying doses of vaccine. They think that they're going to be able to vaccinate everybody by the end of the summer. So that seems like a tall order, but anyway, so it seems to me that it was kind of strange that it sold off like this to begin with. That was a fairly significant pullback. But then again, you can see the madness here, where in like just, you know, 4 days, this thing exploded higher, and so it basically filled these gaps, came back to where it was. So this NEO here has been this was up almost 32% as of yesterday's close, and it's been even, you know, considerably higher than it is now. But this seems like a pretty decent long-term stock. I mean, you know, obviously these things are volatile, but this is one of the electric car EV stocks or whatever, and this could actually turn out to be a pretty decent long-term winner, right? But you never know. I mean, long term's relative. So there's lots of stocks that you think could be long-term winners based on, you know, what you think now. Although I discussed this a few weeks ago or a couple of weeks ago about how all these there's a lot of European countries have mandated that all new vehicles sold have to be electric cars by like 2030 or something like that. 20, yeah, I think it's 2030. Wouldn't be 2025. That'd be too soon, but you could look it up. Anyway, that's gonna, you know, have a huge impact on things, and this particular company is been one of the hot electric vehicle stocks. So it's got this little pattern going here. The trailing stop has moved up to just under this series of recent lows in this last pullback. So basically, make sure I got that right. Yeah, so basically, this trailing stop is gonna sit right here, and one of two things can happen. This current pullback is going to come down and tag it. I'm trying to get it over here. This current pullback is going to come down and tag it up here, or we're going to get a little bit it's going to hold, you know, these prior lows here and cycle back up. So that remains to be seen. Let's see, GDS. Here's another one that just hit the trailing stop today. Yeah, I mean, it's amazing the volatility in these individual stocks, and especially the more expensive that the longer these range days like this and the bigger moves they make, it seems like the 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 harder they fall, the harder and faster they fall when they make, sort of, this is kind of a parabolic move. It really was. And so you can see they peak out and they come back down. Um, there was actually, well, let's see, 102.50. Yeah, there was a parabolic stop back here that got hit. Um, it's not really supposed to happen that way, but it was a pretty significant move, right? I think I pointed this out in the past couple of weeks. The number of days here where it had a higher low in a row, and so. But anyway, no big deal. I mean, it turned out to, it hit the target down here, made quite a move, and come back down, and so that's going to be closed today. So, a lot of times you'll see that you'll see when the market sort of changes its behavior, its characteristics, that a lot of the open trades will get closed to sort of make room for a new cycle. So that's just the way that it works. If the market goes into pullback mode, then once it runs its course and it starts to rally back up, then a bunch of new stocks will trigger in. We'll have a whole new batch and sort of start the cycle over. So the problem with this cycle is that it's been just like one big long sort of drift higher. Not really, not really a good swing cycle in the overall market. Like the overall market theoretically, would have these real nice sort of swing cycles where it pulls back for, a couple of weeks and then turns around, swings back up. But individual stocks now are, they have the pretty decent swing cycles. So this one I'm not particularly fond of just because it's an ETN. It's relatively thin. It's the price of coffee basically. And so, I mean, it's like coffee futures almost. And so, but you can see that, it does have its little sort of cycles and that. And the target is up here at 39 bucks. It came really, came pretty close to that, honestly, but not quite. Now it's sort of in pullback mode. And the craziest thing is that this trailing stop here is just, literally right under the lows from a couple of days ago. So it's moved up a little bit. We're talking 50 cents here. This is not an extremely high beta ETN anyway, and so I was just not a huge fan of it, pretty much based on the volume. That's the thing. It just trades really super thin, so um, it does tend to have, pretty big cycles, and so it's still in the midst of a bigger upcycle here, and see what happens with that. As far as the pending trades go, let's look at those real quick. Basically, when a stock starts to sell down like this, it'll hit the pending list, and as I mention all the time here, typically hits the pending list with the trigger like way far away from the current price. And so this would be the newest one. Like this one just hit the list, and this is not going to trigger anytime soon. So that's roughly the area of the trigger. And so the idea is that, see if I can find a spot on this chart. It's kind of yeah, well here's one like way back here. You can see a couple of trades on there. I mean, this worked out pretty good back here this last time that it sold off, but like way back here, if you look at this, there was a trigger back here that it sold off pretty hard, and then it never actually triggered way back here in June. And you can see it spent a lot of time bottoming out and was sort of all over the map, and then the system picked it up again. I guess this nice orderly sort of sell-off right here. This is actually ideal. You can see how it it sold down, and then you had some narrow range consolidation days, and then it turned back up. So right now this is kind of a disorderly sell-off. So I don't imagine that it would take quite a bit of time for this thing to sort of settle down, and then theoretically, if it doesn't drop off the list, theoretically this will come down to match it. So jam through these real quick. Fate, this is the same thing. Big sell down underway right here, including today, and this is not going to trigger in anytime soon. So I'll just put I'll put a little trigger line on there so that I can drag it down as time goes on. Nike, wow, look at Nike. I guess I don't know if they came out with earnings or not. I know Nike has a weird earnings schedule. Plus, earnings kind of throws a monkey wrench into everything too, right? When we're in earnings season, because I haven't looked up the earnings on any of these, and so the idea is that we can trigger in if a company's like on the list and then comes out with earnings and that turns it around, it can trigger in on earnings. So, but we don't want it to, we're not going to get into it ahead of earnings, right? If it happens to be on the list and triggers in because it came out with good earnings and that sort of turned it around, then that's fine. So here's another one, big sort of sell down underway here. Um, hmm. That's not the prettiest pattern right there. It almost kind of looks like a head and shoulders, but as you move down the list here, yeah, but a bunch of these have just sort of hit the list here lately. Yeah, there's another one that's not all that pretty, but it is what it is. I'm looking for one that's like really setting up pretty well. This one doesn't look too bad. This sell-off right here is kind of orderly, and it is kind of consolidating a little bit. Now this has been on the, and so this is more along the lines of what they start to look like after they've been on the pending list for a period of time. I don't have any, it just all depends on the individual pattern and what the stock looks like. So I don't know what the average time is from when they hit the list to where they trigger in, but it can be like, a couple of weeks or more, right? And so this one's still got some work to do. If it will continue to consolidate, this may move down and meet the price out here in the future. So that doesn't look too bad. I'm trying to see if any of these look really good. Yeah, this is a little, this is another one that's still got quite a bit of work to do. So ideally, well, this is interesting. So this, back here, it had sort of a big sell-off, and then it triggered in, it looks like on a gap up and ran higher. That's interesting. But pattern not looking so great here. Oh, and something else to keep, and part of this obviously is part of it is obviously like today, a lot of these stocks look really nasty this morning because of the morning sell-off. Market's climbing back already. I mean, it's still down, a little over 1%, but we're way off the lows here since I started the show. So S&P's 30 points higher than it was when I first started. Well, I'd say than the morning low here, not when I started the show. But all right, so let's see. Pfizer MOH. This one's kind of interesting. Back on the list after this was a crazy one back here too. Had a recent trade in this back in December where it triggered in, and then you had this move here, and this one long range day here just kind of threw a monkey wrench into everything. So the stop had moved up to like roughly halfway in this long range bar, and then it came all the way back down and tagged it. So now it's back on the potential list, but as you can see, it was starting to sort of shape up there, and then past couple of days it's gotten slammed. So, and then of course Boeing, right? So let's see, this is the one I wanted to look at here, was Boeing. Let's see. The trigger price is 212.50. So there you go. So it's still, isn't that crazy how that, like each week that I've done this show, I've marked the trigger price on Boeing. And so this is probably the best example that I could come up with of, how the pending list actually works. So let's see, it's 212.50 is a little bit higher than I have this, but kind of get the idea. And so yeah, I mean this is a great I some of these aren't extremely accurate, but it's kind of hard to get them perfect on the chart. Not that it really matters, but you get the idea. So yeah, so back over here, um, it was in pullback mode, and then so that it started off. There was a trigger like sort of above the recent price action, and each week the triggers kind of come down, and you can see right here, it didn't quite tag the high, didn't quite tag what would have been the trigger at the time there. And so this is a good example of why we use the closing price. It has to close above the trigger price. And that just basically sort of helps confirm that a change in trend is underway. So you can see the way I drew this trend line. It looked like it was getting close to triggering here. It had a trend line break. The way that I had the trend line drawn like this, had a decent trend line break and kind of got some follow through. And so, the high this day could have been a couple of bucks higher, but it's still reversed and continued to sell off. It's real tempting right now at this point very tempting to move the trend line like that so that it encompasses this high back here. And so it actually makes a little bit more sense too as far as the current trigger goes. So there you go. In order to and of course, they just came out with earnings, and so the thing's down, it's down 4% now. But sometimes you get a sell-off like this, come out with earnings, and theoretically this could sort of mark like a little, today could turn out to be a pivot low, and this thing could turn around from here. I guess a lot will have to do with the conference call and what all the analysts say about it. So, but anyway, there's the trigger price up there. This particular run up here, if you look at this, it went from 140 to 245 in a very short amount of time. Basically, from the beginning of November to the first week of December, it had that massive run up. So it's not really that unusual to see it sell down like this and give some of it back. The question will be, the question is, or will be, what it will take to change trend here. So I like my new trend line a little bit better. So anyway, a lot of craziness going on in the market, and I wanted to look at the NASDAQ real quick. NASDAQ, is riding up this really super steep trend line, and the funny thing is that it seems like everybody is more, I don't know, more sensitive to any sort of little sell-off. I mean, even though the market is just, it's gone straight up practically, and there's a couple of dips back here, yeah, and these were great. This is more sort of typical market action, I would say. These runs where it just sort of drifts higher and then goes parabolic, and then this run, I mean, that's more uncharacteristic. It seems that lately people are more sensitive, or I should say the media is more sensitive to any sort of little sell-off, like like typically, 3%'s a dip, 5%'s a sell-off, 10%'s a pullback, or over 10%'s a correction. But the market has always gone through these cycles, and it's not really, it's highly unusual to see it just for so well, think about it. Here we are almost at the end of January, and since November, honestly, since November, the market is just basically, with a few little intraday dips or whatever, the market is like going up at, I don't know, that's not quite a 45-degree angle, but it's a steep angle. And I mean, it does like to go up at extremely steep angles anyway. So there you go. Look at that angle. And then look at how, right towards the end here, right towards the end of that move, it spent, and this is a lot of time that went by here. So basically that's the end of July all the way to the beginning of September. So it spent all of August just kind of going parabolic, narrow range, and in August of all things. So, but anyway, yeah, I mean the market itself is it's kind of like the character of it has changed a little bit, and there's a lot of things that are different. And so, we're in a different sort of environment. This is not the same type of environment that people that have been doing this for a long, long time are used to. So anyhow, the first sign of trouble to me, and I've been saying this, for a while now. So you're going to see these little dips and this and that, but the first sign of trouble will be when this trend line gets penetrated. And that doesn't mean that, that's obviously the overall market. Individual stocks are a whole different story, The market's a popularity contest, and certain stocks come and go from favor, and that's basically everything in a nutshell. And so it's a stock picker's market sort of, and some stocks are gonna get crushed if we get an actual pullback or dip in the market. Some stocks are just gonna get decimated. I think Apple's coming out with earnings next couple of days. Facebook, I know, is coming out with earnings that might be tonight. So Google, I mean, all the biggies are getting ready to come out with earnings. So it's gonna be interesting. Let's see what GameStop looks like here. Yeah. Over the years, as long as I've been doing this, anytime that there's a humongous gap up, like just ridiculous gap up at the open, that's more times than not, I would say probably 80 to 90% of the time, better off selling it. Better off selling that gap instead of getting greedy. Not that, but this is a whole different world here. Look at this. This stock's up, 100% from yesterday's close, but from the open, like from today's open, it's down double-digit percentages. So it's just nuts. This is the environment we're in right now, which is just crazy. And so we'll have to see how everything shakes out. So anyway, yeah, our list of looks like we're gonna have a couple of the open trades are gonna have hit the stop, and so they'll get closed. And then we got this whole new batch sort of coming in now, and there may be some after a little bit of a sell down like we're seeing today, we may actually see some others hit the list. So we're it feels like the market's kind of in a little bit of a transition mode right here, and it kind of feels like maybe there's a shakeout coming, which February is typically a weak month, to be honest with you, in the market. So we'll wait and see what happens. But as long as this uptrend holds, then we're not going to see a whole lot of. I wanted to look at the 50-day moving average, which is that red line, is like coming right up to that trend line. The 200-day moving average is pretty far below. recently, back in December, and even more recently, before this started sloping up, the distance that this was trading above the 200-day moving average was kind of significant. So, um, yeah, could be a bigger shakeout in the cards, but everybody's sort of inclined to buy the dip, which kind of offsets everything, right? Everybody wants to buy the dip, waiting for a dip to buy, and so as soon as you get like a little dip, some people rush to buy it, and that's why the market's having trouble, like actually having a decent sort of sell down, which is ideally what you want to see after a move like this. So anyway, stay tuned. We'll see what happens. So thanks for tuning in. I'll see you guys back here next week.